Welcome to my channel, CA Latest Nov, and today we are going to deal with, does the auditor have continuous responsibility after signing the audit report as per SA 560? Imagine you are the statutory auditor of ABC Limited. The financial statements are prepared for the year ended 31st March 2026. And after completion all the audit procedures, you sign your audit report on 25th, 2026. You feel relieved because the audit is complete. Now suppose someone asks you, sir, after signing the audit report, are you still responsible for continuously checking whether any new event has occurred in the company? Many CA Final students instantly said yes. However, SA 560 says otherwise. Under SA 560, subsequent events, the auditor does not have a continuous or ongoing responsibility to perform audit procedures after the date of the auditor's report to identify events that may require adjustment or disclosure in the financial statements. Why is there no continuous responsibility? Think of it in this way. An audit is conducted for a specific accounting period, and the auditor gathers sufficient appropriate audit evidence up to the date of that audit report. Once the report is signed, the auditor engagement in terms of gathering evidence is substantially complete. If auditors had to keep monitoring the company indefinitely after signing the report, the audit would never truly end. Therefore, this is the boundary it is drawn. Does the auditor have to responsibility at all after signing? Not exactly. Although there is no active duty to keep searching for new events, the auditor cannot ignore a material fact if it comes to their attention after the report date. Suppose that 5 days after the signing the audit report, the auditor receives reliable information that a major fraud existed before the balance sheet date. Inventory records had been manipulated, or significant liabilities were intentionally concealed. Even though the auditor was not required to keep searching for such matters, once they become aware of them, SA 560 requires action. The auditor should discuss the matter with management and, where appropriate, with those charged with governance. Determine whether the financial statements need to be amended if management revises the financial statements, perform the necessary audit procedures on the amendments, and issue an appropriate new auditor's report. If management refuses to take necessary action despite the matter being material, consider appropriate steps to prevent users from relying on the previously issued audit report. Let's take an example. ABC Limited's audit report is signed on 25th May. On 30th May, 2000, auditor sees that the finance manager had committed a fraud in February 2026 before the year end. The fraud existed before the financial statements were prepared but was discovered only after the audit report was signed. The auditor was not expected to continuously search for such fraud after signing the report, right? However, once this information came to the auditor's attention, SA 560 requires the auditor to evaluate its effects on the financial statements and take the appropriate actions if the matter is material. The auditor does not have a continuous responsibility after the date of the auditor's report to perform audit procedures regarding the subsequent events. However, if a fact becomes known after the auditor's report that had been known earlier might have caused the auditors to amend the report, the auditor must take appropriate action in accordance with SA 560. Thank you.